All right, let's see if you can hear me. 1, 2, 3, testing, testing. Let's go for it. So, well, for those ones that don't know me, I'm Daniel Martin. I'm going to look into stocks. If you got any requests, just please feel free. Let me see if this works correctly now. Let me see. 1, 2, 3, testing, testing. Hi everyone. Can you hear me? Alright, I hope everything is fine because I'm going to go for this now. So, let me share the screen. Where is the screen sharing thingy? This is here. I'm gonna share screen. Alright, so I believe you can see my screen now. Let me go for that. Alright. Got 1,000 indicators, just create new ones to make my life easy. Remember, first, before you create an indicator, you must have a what do you call it, a let me see, what is this, what do you see, so what, can you see my screen or not? No, I think you can see my screen very well, right? But I cannot, I don't know if you're talking or not. Hold on a second. I believe so. Okay, so so as I said before, when you create an indicator, it's very important always that you first see your pattern clear and then you create an indicator. Do not actually tend to go into an indicator and try to use that indicator first. First you need to find the pattern, the structure, and technical analysis. So find what you're looking for and then try to see if there is tools that can help you to make your life easier, but not the other way around. Yeah, I'm just telling you because I have tried that before. It doesn't work, even with thousands of indicators, and it doesn't make your life easier, make you actually more difficult because you need to test 1,000 indicators, nothing to do with your strategy. So can find similar, can find equal, something that can help you a bit, but not really on the long run is not. Just create your own indicators is best. All right, so we're going to look into stocks. With this case, I got the list here from Japan. With some of them is a repetition. I can see here Sony Corporation twice. Yes, Sony Corporation here in consumer goods and technology. So I'm going to see if I can find it on TradingView. This is actually, you see, this is not a preparation whatsoever. I just actually going for it straight away. If you want to actually have any if you want to actually look for me to look something else, like I did last week, gold, then it's a good time to ask for it, or any other tools or any other indicator, any things. Just let me know on the chat group. Yeah. So all right. So I'm gonna look into those ones one by one. So any questions, feel free. Okay. So let me put this in here, and then it's easier to have full screen. For those asking me before, I only got now 2 screens. I used to have 1, 2, 3, 4 plus the middle one, 5 screens. It's too much headache, and normally you go neck problems. Let me finish my coffee. Now, okay, so all these companies are being selected first by what is called MOAT, which is actually the top companies with the highest MOAT on that technology, or sorry, on that country as a base. Doesn't mean that the money has been distribution only in that country. It can be actually distribution anywhere, as everything is being selling different, but the base, they are in Japan. So now looking for to see if those companies based in Japan, they are strong enough to moving forward at least 9% per year. And that's what we're looking for now. So let's do the first one, which is called Sony Corporation. That have twice, and I have it in technology and consumer goods. So let's go for a Sony. The number is 6758, and it's here. It's on TSE and as well. Okay. Let's go for Sony Corporation based in the stock market there. All right, let's have a look. How am I looking into that? I'm not going into 15 minutes, obviously not. I'm gonna look all the way up to month or weeks, yeah? Ideally first month, first view, and then weeks, yeah? Look at that destruction here. So at this time, I will never ever buy this company, obviously, after all this drop. Yeah, it's a no-no. This is price 126 after that much going up and then going down. Pretty much this is destruction completely. So I'm not interested in this type of company. So even if it's a more, that's good. Now it's solid pushing up. So my question is, will that be doing the same thing, a correction all the way back again? Potentially will happen. So I don't know. We're going to use that AI is involved in this movement. 2012, 24, okay, we can actually work out that a new philosophy happens here and work out the rest of the details. I'm looking into the fundamentals later. First, I look in the technicals, and this already tell me that this company have 2 periods of time. One is based before 2012 and now. So means we have 2 companies. This was one company. This is the second company for me. So what happens here? That switched it from all the way down, which is drastically destroy the company from all the way there to down here, is 95%. So whoever will buy here and holding, there's pretty much secure your portfolio. And then from there, we just all the way up to 2,880% up. So it's crazy. All right, so now we have a different company. So let's have a look company number 2, which is this side here. So what we're going to use a tool that tell me the trend of the movement of the market. So I'm going to use what is called first low, high, slow. Look, I can use this one here first, or I can use this one. So you see that, and I can show you where the market was hitting on the highs quite quickly. We make it this tool, and let's go for this one, make this one, and make this one. Yeah, this is kind of 4 highs quickly. You can actually make a line. The typical classic lines are not keen into that. So then we have this low, we go this low, we go this low, we go this low, and we go this low. Yeah, so now we're going to use a projection to see from obviously this here. If I use this one, then I have to use probably this one, or I have to use that one, so which is the past. So we're gonna eliminate this option here. Are we going to use those 2 as a reference, as a growth? Yeah. Now let's go back to candles. Now we're going to use this high, this lows, and blah blah blah. Let's do that. Let's use this inflation tool that we have, and we're going to go all the way down to 2014 and all the way up to 2013. So first let's start from the top, 2013. Let's go there, and we move into 2013. Easy peasy. There we are on 2013 zone area, the year. Now we're looking for a bit higher. If you notice, it's not going up much. Let's go a bit more. So we're gonna do this, and we're gonna use a 50% growth, and it's too much. Let's go 40. Oops, that's 2013. No, it's not good enough. We're gonna go for 3. Let's say 33%, and we have this area. But these 2, they are not actually that strong. So we're gonna go for 20. Let's see what happens now. They're on 20. And we go to low. Let's do 25, 26. I think it's gonna be 27. Let's have a look. 27. No. 25. Okay. Now we got actually the highs multiple times, and it's 25% plus 3, 28% on the 2013. So we're gonna go 2013, and we're gonna make some lines. They're gonna show you in a bit. So what I'll do is this, the follow. I'll do this line. This is a year candle. Yeah, this is like let's make it a solid line like that. We're gonna make it. Make sure it's 1 year full there. All right, there. Okay, now I'm going to make a note here. It's 2013. And the total is 28% growth. Okay, now we take this, we clone it, and we're going to use it in different locations. So let me see if you ask me any questions in the meantime. No questions. All right, so I'll continue doing this. Where is my line? Okay, let's do again. This here, clone here, 28% growth on the new projection of the company. So we have another one here. We're going to make another clone on this one, clone it. And we're gonna clone one more time. I'll explain to you why. Okay, so we got this touch here. The last touch was in 2021, and then we got a projection now of this high here. We're gonna do one more projection on the future. So we're gonna estimate what will be our target for next future, which is this next year. Yes, and that's how it works. We're working year by year. So sometimes the last trade I took, it was 15 months. So 28 is somewhere. It doesn't need to be perfect yet, because nothing is perfect. It would go 28 if you notice that it's weak. So about that area, that's okay then. All right, so we have that year cover up, and that is the exactly sides. Let me see, a bit higher there. Make a straight line there. I think this line is straight. I don't know. Yes. Okay. Now, so now let's see. This is actually our highs. So we know we go up, showing a projection of 28%, and then we're gonna look for the lows, and we're gonna go to this low this year, 2014. So let's do that. 2014. And that was it there. Now what we have to do on this case is the same thing. We're looking for get these areas covered. So let's have a look. If you notice, it's not covered this area here, and that is okay. That is too on top of that. Let's get down to less percentage. Let's make it down to say 5.05. Let's do 5%. It's two together, okay, because it's just here and there. It's not able to do it properly. So I have to move to the next one, or I have to go to the low. Let's go to the low. Let's go 1 year down. There, that's too much. It's different growth. Let's go first. Okay, let's do this one first, and then we change it, the location. Let me, oh, sorry, 3. Then we're gonna go to here, 20% more. So what we have now is that is 20% growth and a bit more, 25. And that is too much. All right, so let's go for 22. And that seems to be okay. So it means we are on top of this area, that area, that area, that area, but now we are on top of this. So, okay, so we're gonna move now from this location to that location, 2016, and see if still the growth is still relevant. Let's have a look. 2016. Normally, after a while, obviously, you see it go a bit lower. So let's go a bit down. So let's go now to 15% growth. And a bit more, 16% up. Now we have it. Okay, so is the Sony a good time to buy Sony? And the answer is no. And you're gonna see, for me, remember, this is my own personal opinion, and this is not a recommendation for you to invest it or anything like that. This is the way I trade myself, okay? So what I'm doing now, I will not invest it on this one, and the reasons behind it is because already it's too late. In this case here, let me make a line there, from there to there, there. So the price is actually a 16, so the year 2016, I can say first 2012, 2016, and then we have a projection of, what's that, 18% growth from the bottom. Okay, so we're gonna say okay on this. Where is that? Didn't change it? Oh, it's changed now. Take too long. Then I clone it. Then what happens now? The last opportunity happens on this week here. That was, which month was that? That was in April when Trump was talking. And then we have one more, clone it again. So now we're gonna go to 18%. Let's have a look. Where will be our 18%? And that will be here, just there. So let's go down. So there, let's measure one more time. Let's make it bigger. Okay, so this is the place. Now we're gonna look gold and Bitcoin and all the stuff like that. That is more fun. So this is the place. which will be you have to wait for. So how am I gonna do this here? So what I'll do is the follow. I'll do an alert and I say buy. This is my alert for 10 years. I'll say that because it can take 10 years to hit the target. So done for now, and this is it. The job is completed now. What do I need to do? Nothing else, just wait for the alert being triggered. Will come up on my alerts, and then I wait to have an entry here. What will be my exit? I don't know. If I buy in this year, it will be there. If it's a buy next year, will be the next one, and so on. This is the way it works for me. If you bought a before, like all this here, let me go there and make a clones to make sure where the places are being hit. If you buy there, those are places you add more accumulation. You keep going, adding more and more and more. But if you buy on the first one in there, if you don't buy there, it's too late. You buy here, you sell there. Let's have a look the percentage you make if you buy here and you sell there. So you make 108%, yeah, plus cost, blah blah. Yes, about 100% profit. Yeah, and then you say, oh, I couldn't make more because it went up more. Well, then you buy again here, yeah. Now you're holding it for 10 years or whatever. So if you buy here, you hold it until you hit your target, which is not gonna happen yet. So you need to have a nice pick up again. So let's have a look at another example. If you buy here, example this down here, you buy there, you sell there, you end up what you buy here, you buy there. It is a bit lower, and that is 148% profit. If you did bought on this low, not that low, this is very lucky that one, but let's say that you bought this low here and you close there, 124%. So you buy, close, you wait, buy, close, 148, buy, and then you wait until hit the target. If in this case, if you bought here on the year 2022, your target will be for this year 302. The next year will be somewhere about 408%. So it's a long way, but as for me, it's too late. If I have a chance to enter it somewhere here, I will enter a fraction of what I'm supposed to be entered here, which was the first entry, and that's it. If it's not working, not working. So in my opinion, is way too late to enter on this trade, and this is the way it works. So why am I doing these stocks? Because you don't need to do anything. You just buy, hold it for long, and that's it. It's just waiting. And then how you need to know how to manage. But the most important thing to be managed without being affected your psychology is not to actually use money that you need tomorrow or after tomorrow. So let's say that you need to live in cost, 90% with holidays, everything together, and you go an extra catch of 10% for you put in your savings. You say that money I will not touch it. Then take half of that, and that half you can actually use it for things like this. That's how I'm doing it. But don't use money that you need it. That you use loans, credit cards, all this stuff. It will kill you psychologically. You will not behave the same way as you behave when you have money that you don't care. But you don't care, but you care, obviously. So that's the way. Okay, so we're gonna move now, guys, to just choose this Sonic as an example. I will continue the rest of the day. It takes about 15 minutes to do one trade. Well, it takes first the selection of the stocks, and then it's easier to follow up with the next. So this is done now. With my alert, I don't need to worry about this to be done again. Just waiting for trigger, and that's it. The rest is done. So, because obviously the selection is the key, yeah? Now let's work out another situation, which will be, let's choose another pair. This is my 28 pairs that I'm working on a daily basis. And we're gonna go now to others with this let's do gold. Shall we do gold? Yeah, why not? Let's do gold. I want to see what's going on with gold or silver. Well, let's go first. Oh, let's do gold. OSP 500. A long time I didn't touch that. Oh, there's a lot of annotations here. Let's clean up all this. Let's clean up all that. Let's see what we have here. First thing first, are we gonna go long or not? So I got some tool here. Yeah. Let's see if it works with gold that just made up to know what is the accumulation probabilities to the next 120 month, 100. So what is actually the probabilities if this month was positive? How much probability will be the next month probabilities? So let's have a look. And the probabilities say here that if the last month was green, the probabilities on the last 120, the last 10 years, the probabilities will be 61% to go again long the whole month. So we're still high probability. Now, if it was 2 months consecutive, what are the probabilities to continue long? Is 57.58. Let's increase the time for once. Let's have a look. We're gonna do 240, which is 20 years, yeah? On the last 20 years, as soon as you go 1 month bullet, yeah, you got 61.11%, so 61% probability to go long. And when it's 2 months consecutive, which is the case on the previous two, you go have probabilities of 57.58 that it will continue long. Obviously, this is actually work out, I believe, better after see a red-green candle. Means it's the month is red, the next one is green. You go higher probabilities that if you have a many months consecutive after. So in this case, this red-green will be actually much powerful than having in the middle green. I guess this is the one, but you notice green. Then you go red. This is the perfect time, and then where will you like to go long? So this is the perfect time where would you like to go long, because it's like a kind of a, what we call it, a flag. So it's like create a push, then uncertainty, then you create a big push after that, and then it's clear the direction. Yes, it is clear. You got not direction, then you go a monthly clear, the next one will be fly off. You see, you got push, then you go not going anywhere, then you go massive candle, then you go next one is green. So you use this as a profit situations, yeah. This could be another one. It's actually the same thing. It's been red or not going anywhere. You got nowhere, and then you go massive candle. The next one you go in long again. So let's do again. 2 red candles, not going anywhere. Next one is green. The next one you're going in. Boom. And that's simple. Let's have a look in the past when it was not so obvious. Let's have a look on the year 2020. On this year it was very okay. Let's see. You go red candle, you go green candle, and then what happened? You lost on the next month. Let's do the same thing. Red and green, and you make profit on the next one. Now you go red and green, you lose on the next one. Red and green, you lose. Red and green, you lose. This one you win. Red and green, you win. Then all the way down you wait. Red and green, you want. Red and green, you want. And red and green, you lose. Red and green, you want. So you got quite high probability to win on the long run to using this strategy. Yeah. All right, so this is the way actually you can actually predict the probabilities of the direction of the market. Let's see if it happened with Bitcoin as well. What would we have with Bitcoin? Which we have a lot of lines in here. So what are the probabilities for Bitcoin? What is, I cannot see it. Sorry, I just on top of my screen. What is that? We go 56. So if there is a, look, 2 red candles, monthly candles, is unlikely happens they will go down after 2 red, so it's pretty much high probability it will go long. Let's have a look at that. If you go 2 red month candles, we'll continue. So let's have a look. 2 red, 1 more, and yeah, well, this is actually a loss. But if you go then, if you count it 1 and 2, you go this one, and then you go the next one is going up. 2 red candles, the next one is a loss. The next 2 candles will be this and this. The next one is up. So we got 2 red candles, the next one is a loss, but no more than 3. It seems to be more than 3 months is actually the maximum I can see. Wow, we got more, we got 6 months here. But it's like, okay, you go 2, you lost, you go 2, you lost, you go 2, you lost, and then you go and big win. 2, 1, okay, it's not that bad in percentage probabilities to make sure it's right. But now if you notice the other one is 56% of probability or 63% when you go to green candles to continue. So you go 2 greens, the next one will be green. And 2 greens, the next one is red. 2 greens, next one green, 2 greens, green. So yeah, it just seems to be that when the trend is happening, it's actually happening very strong. Like a 2 greens here, you go 4 months. You go 2 green here, you go 3 months. You got a 2 green here, there's a loss, 2 green, a loss. So let's have a look here. This is now the trend is a bit smaller. Yeah, let's have a look how percentages changes from over time. Oh, let's have a look since we have the 2016 movement. Let's go for from this movement to there. What is actually the movement? 2,672%. People was get rich and poor in there. Somebody have to take the winning. 1,916% from that high to that low. And from this high to this low, let's see how far we are now. And we are now in 765. So 765 compared with a well, that's more. 1 second. 5,000. Hold on a minute. Let's go to the bottom of the structure. This is 5,352. Wow, this is crazy. Didn't know it was that much percentage. And this is actually 2,000. So 5, 2, and 700. So 530. Okay, so it's about 6 times less. All right. So it seems to be that the market is not going anymore that strong. So do I believe that Bitcoin will go down? Yes, I believe that. So I'm waiting for that actually. What I'm going to do is to make an alert for Bitcoin as well. So I'm waiting for Bitcoin on this location or next year. Let me get this close off. Looking for Bitcoin to close it in this location. So if next year is still looking in below this area, it's a good place to buy. So let's get an alert in this one. So alert. Let's do this is BTC BTC by 14 years. That's what I call it myself, and that's the way it works for me. All right, so this is the location for 10 years. This is the year 2020, whatever was the 2025. Let's do this alert as well in there. We're going to do the same thing. 2025. This is the what's the price? 63,000. Okay, that's very difficult to go. Maybe possible to go there. Okay, 2025, we have a, yeah, that's it. Let's wait for that. Let's do it by for 10 years, 10 years. So that's it, create an alert. There you go, done both of them. All right, so Bitcoin is completed now. So this is actually, for now is complete. Now what I'm going to do is to work out a other pairs. Let's see if you look. Let's do the SP500. What's going on with SP500? We can use our tool now to see what's the probability to continue long or short by the monthly candles. This is simple. You can use actually everyone can do this tool, I believe. Look, let's have a look. So we're gonna use a from 2018. So that is what's that? 7 years, 7 times 7 times 12, about 80, let's call it 80 months, yeah? So we're gonna change this to 80 months. Let's do 80. What is the percentage of probability since this push of the market is going up? So we got this last correction, which is actually great. We are in month now, 1, 2, 3, 4. Since the break, it was actually 1, 2, 3, 4, 5. If we look under the one it's been used as well as number 6. So based on the historical data that have been analyzed in the past, after 6 months, between 6 months to 18 months will be a massive correction, which is something like this, yeah, which is actually big. So talking about more than 25%. In this case, it was actually 27%. Let's have a look at the previous ones, which is the COVID times. That was a 30 plus, no? 35% or something like that, yeah? So it can happen again. Yes, it can happen. I don't know when it's going to happen. I don't know how it's, but it's like from historical data, it happens that way. Let's have a look at that sample of what I mean. Look, if I make a measure here now, and you're thinking, okay, let's see how many months it's actually happened. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This 16 months and it start to go down, yeah? So if you're talking about the next one, this is how I'm talking about. It means what will happen. I'm looking always in probabilities. It's not know when, how it will happen, but I'm looking probabilities when it's gonna happen. So we got 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So we can call it 14, 13 months, and then went down for 3 months and very badly for this candle here. So you see, this is actually 13 months. So why we expected to get another drop? Yes, we do. So then we see how far it's going. But now, if you're looking for this, every time it's the month is in green, the probability to go high is 66%. The probability to go higher, if there is 2 months consecutive, is quite high. So this is the way it works for now. Now, if it's going down, the probability to continue another down is 37%. So if this month become negative, how probably it will be going down is by 37%. If it happened 2 months consecutive, the probability will be 30%, which means drastically quite a lot. So it means after 2 months, it's time to buy. So let's have a look at if this is the case. So in first things first, you need to be able to see a breakout structure. So well, no, there's no one I go because this is different from that one. So if that works the same way, look, if we go from this to there, yeah, we use all these drops, yeah, there from there. So what if you notice is actually, let's make a box to for you to understand. This is the drop, yeah, that's the direction, and then we're gonna make another box for this drop from there to there, yeah, that's the direction, and then we're gonna make another box. Let's explain to you what I'm doing there. So this is the group. Okay, so if you notice after the drops is not 100%, we'll go, obviously nothing is 100%, but we go higher probability that we'll go back again to the previous breakout location. So where is actually our last breakout location? In this case will be this area here on the 6,144. Now this break here, I will very careful thinking about, because this was Trump talking. So it's not really a problem of the economy. It was Trump talking and create this movement. So, which is totally, it was uncertainty and behavior of investors was a bit, yeah, it was clear that the market didn't know where to go. And then this drop happens because Trump movements make it happen. So, which is not real data. Data is more like a things is actually data like a, you know, inflation, you know, what is going on with the economy. That is real data. What you can see here, it was Trump talking. So probability to go, if this has become the drop moment or here or there, we don't know when it's going to happen. We go quite high probabilities that we will go back again to this level. Yeah. But even I will doubt this level, I will go all the way down to this level. Yeah. So because I'm thinking that if I'm not wrong, this is a fake movement. So if that is a fake movement, we are already way too high. So we talk about 3, 4, 5, 6, 7, 8, 9, 10, 11. We're gonna call it this 11. We do the drop 11. Then we go 12, 13, 14, 15, 16, 17, 18. So in the next, before Christmas, we're supposed to have a drop down at this case. It's about the average of all the drop down in history. I cannot see all the data on this chart, but all the drop down in history is normally up to 18 months is the record of number of months of pushing up. So 18 months somewhere, whatever, 1 or 2 months more. And if this is a fake one, we'll go down. After this, we'll go all the way down to here. Yeah. Which is, we don't know how far it's gonna get. Let's see, imagine if we go 2 more months up, I don't know how much percentage, let's measure that. We can use these two that go here, which is telling you exactly how long, much percentage. 4.65, that's an ATR indicator, by the way, very simple, you can build that yourself. 5%, let's say that's 2 months consecutive up, let's say 10% max. Okay, so potentially up there. If that is happen and they go all the way down to 7,500 there, so the expectations to go down will be up to this level, 35%. Yeah, it's quite a big drop. Yeah. So if that happens, so this is one of the options I was looking for, is to get into these situations that you need to be prepared for that. Now, what do you do when that happens? Is just keep money in your pocket or buy auctions or put some money into your saving accounts or just do nothing. That's what I do myself, and waiting until you can buy again. And buy, normally you start to look more for all the companies, you recalibrate your portfolio, you waiting and get buy again all your stocks again in the right prices, which normally is the same companies that you have. All the companies go up except when this is a massive destruction of companies because some of the companies take over. Yeah, always check the quality of the company, very important. Yeah. All right, so this is what I'm looking for. So a projection, let's have a look what happens if we make a projection of this tiny winning here. So let's make these ones, this high, the high, the high. We're gonna remove this. I want to see how it works for this one. So all this is just tested now. Just 1, 2, 3, and 4. Even if this is fake, we're gonna use that one fake one. Okay, so let's have a look. So let's get from year 2018, all the way 2018 there, and we're gonna make a projection. I think it was maybe 9%, something like that. No, it's more, so let's go for a 12. All right, so let's go for 14. Let me explain to you 1 minute. Okay, we got this, and that is 14. Now we're going to move. You see, this is not this is a good projection. This is a good projection. This was no, then I was not real fake out. This was neither. But now we are here, and it's not touching that. So potentially it's gonna go to 8,000. Let's move our indicator to this year, 20. Let's see what happens if it's still the projection the same. So, yes, it looked the same. 14% is good. Hello, how you doing? Good morning. Good morning. Well, it's for me, it's already 1:40, but yes, good morning to you, wherever you are. No problem. Any questions, please feel free to ask, yeah? So now what I'm looking for is to see if this is the 14% projection in growth over the year. Let's see what will happen if I move to this year, 2021. Let's go there, there. So we have now a projection of 9,000. That's a quite nice number, round number, I like it. So if that will be hit that target, let's make that as a high. Let's make the maximum high there, and we're gonna go back again to measure possibilities range of target. So we're gonna back down 20. Then we got that line. We're gonna make that line there. Okay, we're gonna continue down. So let's make it a projection of, now we're gonna go 19. It's about the same area. 18, the same area. And that's it, gone. All right, so we go around that area. So what is the meaning of that? So minimum expectation is to hit this area, which is 8,300 all the way to 9,000. Okay, this is the range of exit for this projection. So means that is a potential option. But if this was a real one and not fake, what is a thing is fake movement, but let's assume it's not, we're gonna do a projection from this one to connect it to that one. So we need to be 20 or this one to connect it all the way to this one. So where we are now, 20 in there. So let's go down to 20. What we're going to do now is to push this down, let's say to 9%, and we have it. Okay, let's do 10 and see if it's going away. Why is GC shopping? 1 second. Why is GC is GDP cut? Why is it shopping? You're talking about GDP cut, I believe, yeah? You're talking about GDP cut. If it's that, if that is the case, I'll have a look in a minute. But the key is simple. I'll let you know, because I've been working on that one for a while. So just confirm with me if it's GBP cut, the one you're talking about, or you're talking about another instrument. All right. So in this particular case, gold future. You go for gold futures. Okay. Do you know the symbol for gold futures on TradingView? So let's, okay, so you're looking for this one here, I guess. Okay, I'll have a look now for your goal in a minute. I just want to finish with this one because this is important. If this is going up, gold will go. If not, it's the opposite around. So now let's have a look at this. This is important to be aware of what's going on with this one. So now we're gonna go to 0.09 reset on this one, and it hit the target. So based on this, we're supposed to get out. No, 1 second. This is the wrong location. We need to move all the way up to 2021. There. So let's push it down. So 7 more 5 Okay, and it's hitting the target already. It's bypass already. Now we're gonna go all the way down to 2020. Let's see what happened in 2020. More down to 119. And the other way down. No, it's too low, mate. This is not, doesn't make sense. Let's have a look one more time. There. Okay, 2020. Yes, 2019 is okay now. Now it's correct. Okay, so what is going on here? We need to push a bit more. 11. And it's not working. 10. And that works. So we are overbought now. This is not good news. So we just end up to the end. If this was here, it was not fake one, we are overbought now. So pretty much we are overvalued now. That's just not good for the stock market. So it means we're supposed to get down now. So maximum will be about 2-3 months. So what we discussed before, 10% more. Let's have a look. 10% from here. There. So potentially we have this high, which is 7,600 as a potential high before the drop-in. And the drop-in, as we say before, will all the way down here. So, interesting. We don't know what's going to happen, but this is my projections. Okay, let's have a look at gold. Okay, gold. I like gold. Let's make money quickly. But now for me personally, it's too high. That's the problem. I go with gold now. Let's have a look at gold. This one. Let me know if that is the instrument you use in TradingView, or I can put another one, different one. Okay. I explained before about gold that is still high probability to go long, and the reasons behind is simple. I just come up with this tool, let's say from 2017 all the way up to this level here. What are the probabilities to continue along? You need to base yourself on probabilities. It's like, okay, is this the end? Well, let's have a look other cases what happened here. Yeah, this is how we're looking into this. Is the end, it's gonna stop moving up, or it's just people take money in their pockets. So let's have a look. So one of the things I do first is to see always the previous month and see what happens. So let's have a look at these picks here, because maybe this is what's going to happen. You know, a massive drop for many months, or this two here and a drop for 4 months, or this here a drop to 2 months, or this here it going nowhere. Let's have a look. How far is this one? So this is 6.4% drop. This one here, I'm talking about the week of the previous month. This is 4.17. Look at this one. This is massive, yeah? Let's have a look again. We go all the way down. And so far, 8.75. This is the highest one so far. But we have another one here. Wow, this is 6. Nothing to do with that one. So if you notice, this is actually massive pullback, but it doesn't mean it's the end of the pushing up. So let me show you something that I use as a tool. 2017 is just here. So if you count in all these months, it's about what was that, 80 months, something like that. So look, I'm gonna click on this one, and this is very simple too. You can build in that yourself. It's just telling you what are the probabilities to continue along after 1 month. The previous month is green. Very silly, but this is how it works. So it means it's counted how this works. So if this candle was green and I am on this month, I go high probabilities, higher than lower probability to go long by 61%. Yeah, so it means if this is actually green, next one will be green. If this is green, this will be green. So this is by probability, obviously. There at one point it stops to be green and you go reds. Yeah, so now what happens if 2 months consecutive is green? Do I have more probabilities? So it's a little bit better than 2 months short, if you notice here, by the last number of years. What does that mean? What I'm telling you with this? But this is telling you, what am I gonna do with this? The question you asked me, is this still continue long? Well, by probabilities, it's still long. Why? Let's have a look. If we got the last two, obviously it went down a bit, and why? Let me show you. So if this was this month and it was a month of August, it was green, you go next month, you go green, and you make a big, you go high probability, you go 61% probability to be right. Let's have a look with the retracement. Yeah, let's start new. Let's say we are on the month of August. Let's see what the percentage changes or not. That works. One is no, it doesn't show you me. When it's live, no, it showed me the last one. It doesn't work. And I put it back again. Okay. All right, it doesn't work that way. But okay, it works because we're looking for the last candle. Okay, fine. So now, what we're looking for now is to know what are the probabilities to continue long. Am I continue long or am I continue short? It's like I continue long. I will buy now to get long based on probabilities. Why? Okay, after 1 month, we got 61% probability. After 2 months, the next month, it will be down to 55% probability. So it will go down 6 points. So the next one, obviously 2 months, is actually the next month will be 55% probabilities to go long or short. It's not that much anymore, but now we got as well, if you're talking about a month by month, it's still a 61% probability. So it's still very high probability to continue long on the long run. Now, it is become red, then you go short. In this case, red, the probability is very low. Now, you need to think about what are the changes fundamentals of the market. What have changed? Do we actually, the economy is fixed? The war between Russia and Ukraine is over. The economy is fixed. Or is just Trump talking to other countries to see what's going on and everything is supposed to be fixed. Do you think it's fixed? Or do you think it's a temporary fix? Or this is to save time to get worse? So thinking about that. And the answer is simple, is that things will get worse. Yeah. This is not the end. This is just the beginners of. It's not going to. If you are a clever man and you got a good part of the economy, you just step back and wait and negotiate with your partners. And at one point, when you see strength, then you can actually push in more. So in this case, I'm talking about China and America. So China is waiting, and they will continue waiting, and they will take over. So, okay, you got it now. Perfect. So what does that mean is that we got times of difficulties. Yes, is the end of America possible? It depends. Everything depends of the technology. So whoever win the next technology, the next robots, the next AIs, the next that can be used in war, that will be the winner. And if this is actually now we use, in my opinion, I'm thinking that Russia against China, they're working this game in Russia and against Ukraine. So if that has happened and both of them win, so if Russia wins, so some parties know that they go advantage of they go advantage to push. The euro will be weaker, euro and UK will be very weak. Then they will feel the pressure of NATO against. So everything will be weaker on the central point. So it means all the energy will be focused in the middle of the euro, when China is still building up and getting bigger and bigger and bigger. So this is not anymore a business of fight and control countries. This is actually a business of control materials. If you got control of materials, you control the world. And this is the new era. It's about who got the items that we need to construction, everything. So be aware of that. So if this is being changed, no, I think we're gonna get worse. So, which is, if in the end of the day, things for me is haven't changed, which we are in a very nice, calm, relaxed times, but we are not going to have that for a while until we have a chaos. It's like first need to come in the chaos, and after the chaos it came in the tranquility, or the relaxation. So the moment we don't have that chaos over, COVID-19 was a good example of a chaos, and then we have tranquility after that. How long it's gonna last? So this is not ended until Russia is over with the war between Russia and Ukraine. and see who win. And depending who win, the things will get worse or will get better. So that's it. So this is the current situation for me. I'm waiting to get long in gold, but it's not the right. I'm trying to see what happened this week, especially this week, because we got a lot of news from USA, and see how strong is America right now. And that will make the difference between gold going continue long or continue short. That's it for now. So guys, hope you understand that economy is not easy to work out. They are working in probabilities all the time. And remember, don't use indicators if you do not have first a strategy. Any strategy works if you do have, then add indicators to help you to make your life easier, right? So I hope you understand this, and see you in the next video. See you next week. And any requests of any tools that you want me to analyze in details, like for example, you're quite interested into gold, I can actually work out a very special webinar only about gold, because it's a lot of work. So I can actually working on it from all the way down to minimum the smaller time frames possible, which could be for me is 3 minutes. Yeah. So I can actually study this and see what I can see. And obviously news is coming on these locations, and see what the economy is going to make effect on the gold direction. So guys, I hope this is actually good for all of you. So I'll see you in the next video. Bye now.